Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective to try to understand where we have the highest probabilities of the next potential move. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video to the end, and I will see you on the charts. In today's video, I want to speak about USD JPY because at the moment we do have quite interesting price action and structure. So first, I will be covering the technical side, then we will move to the order flow. Now, starting here from the monthly time frame, what we can see is that the market is currently testing a very strong area of previous monthly resistance, which has now turned support. Now, as the market is testing previous resistance turn support, there is definitely the possibility to see the market here provide a potential rejection to the upside. We can also notice how we have an impulse and correction, and in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse, and if we do that, we can see how we have a perfect 0.786 Fibonacci retracement lining up exactly at this previous resistance turn support, creating a strong confluence of support that we could expect this market to reject to the upside. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can notice how there is structure at this level. This zone was acting as previous resistance, which the market broke to the upside. At that point, that previous resistance was turned support here. Now, in a situation like this, even though there is resistance here, at least we're supposed to go and test it. So once again, we know that all this zone here that the market is currently trading in is all support on the monthly time frame. On the weekly, we have resistance here. So what we could expect is at least a rejection of the monthly support to go and test the weekly resistance. Then potentially we could also break it, but at least we would like to see a rejection all the way up to retest the previous weekly support turned resistance. Now, going down on the daily time frame, what do we see? Now, from a daily perspective, this is where things get very interesting. Now, first of all, I did speak about USD JPY quite a few times in the past. I spoke about it after this break and retest from here. I made a full breakdown explaining all the reasons for which we could expect this rejection lower, which is in fact what the market gave us. Then we had the creation of this W from here. I made another breakdown explaining all the reasons for which we wanted to see a rejection to the downside. And by the way, I will link in description these previous analysis, so you can go and check them out for more free education. However, at the moment, what is very clear is that the market is trying to create a new pattern. Now, in this case, the pattern that I'm speaking about is this potential M pattern that the market would create if from here we see some bearish continuation. In fact, if from here we see the move to the downside and we follow the pattern, we would have impulse correction, tried going higher, failed, and went lower. In that case, we would have the creation of an M pattern. And in general, after an M pattern, you want to see a rejection to the upside and completion of the M pattern at the neckline. Now, since all this area is anyway support on the monthly, as we have identified at the beginning of this analysis, if we do get this move to the downside, there is a good probability that we will see the completion of this daily M pattern because, as I just said, on the monthly, all this area is support. So what we could expect in a situation like this is a bit of bearish price action for the market to create the pattern, and if we get this bearish price action, at that point we would have good probabilities for a potential move to the upside and short-term longing opportunity back up to the neckline, which is also the completion zone of the pattern itself. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the JPY, we can notice how lately the JPY has once again continued to getting a bit stronger and stronger. We went from having a very negative minus 102K and we're now sitting at minus 65K. So the trend in the short term is clearly of getting stronger. And we see that reflected in the price action with the market creating all this rejection lower. However, it's also important to keep in mind that in the long term, the JPY is very bearish. If we look at the long term, we went from minus 25 to now minus 65. So still, it is much more bearish than it was in the past. So at some point, we need to see some institutional profit taking on the shorts. And that would be great to have it around this area here because it would be near the low, so at the maximum profit level. So if we do get this move to the downside, I do expect some profit taking from an institutional perspective happening around this area, with institutions starting to somehow shift their positioning, considering that at the moment they're already starting to take profit. It's now 6 reports in a row that we see thousands of longs getting closed. If institutions were still interested in longing the JPY, meaning shorting USD JPY, then they wouldn't be closing their longs, right? They would be adding longs because they expected the market to go lower. Since they're closing, I think that they expect somewhere around this zone to see the bottoming out, meaning that if we will see this move to the downside, I do expect a potential rejection higher. So if we do get the creation of this M pattern from here, how we could be approaching this potential short-term longing opportunity. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection higher for the market to complete the M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 down to $97, plus as an option, if you join Blueberry Markets from the student dashboard, since I have a partnership with this broker, they will give you a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the timer goes to 0 and the offer expires and price goes back to normal. However, spots are limited, so if they get filled before the timer goes to 0, then the offer will end anyway. So I really suggest that you take advantage and join directly from here and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does help with the YouTube algorithm, and I will see you in my next video.